Now, back in August of this year, our next guest said that a Democrat House coupled with a GOP White House and a GOP Senate is a very bad combination for the markets. That's what he said in August. Tom Lee, who said it back in August, is with us again now. So, we got that scenario, which you said was terrible for the markets.
Yes, what we were saying is that when you look at years, when you have that combination in Congress plus a Republican president, it happened with Taft, Hoover, Reagan's first term, which was good, and then George W. Bush. So what we ended up with was historically very stressful economic times.
Okay, well, we've got the combination.
Yes.
Democrat House, Republican Senate and White House. It's not so terrible for the market, is it? In fact, I think you think the market goes up from here.
Yes. Between now and year-end, I think that it's not about who won the House. It's a lot about how everybody sold all their positions in equities. In fact, you know, like when you look at hedge funds, they're net short, more net short than they were February 2016.
What does net short mean?
They're positioned to make money if the market goes down. So
So they're betting against the market?
Yes, that's
how
it's
going down.
That's how they were positioned into Election Day.
Okay.
So usually when the boat is tipped to one side and then something happens, people suddenly have to put their bets back on, and I think that's why we rally 10% into year-end. You know, I think we're going to...
Whoa, wait a minute. We're going to rally 10% by the end of the year. We're at 26,000 now. 10% of that is 2,600 points. That would take us up to 29,000 by the end of the year.
Yeah, for the Dow, yes, and for the S&P, it's well over 3,000. Yeah, that's our base case right now.
That's what you're looking at?
Yes. Part of it is that we got the midterm relief rally, and that typically should take us to 2,900. But on top of that, on October 11th, we alerted our clients, the market broke down so severely in terms of the actual number of stocks above their moving averages that you only saw it happen 9 times since 1990.
Okay.
And the average gain was 13%.
So you're down with 10% by the end of the year, up from where we are now. Yes?
Yes, S&P 3000, yeah, roughly 10%.
You're
yes.
roughly 10%.
We made some gains, you know, since Monday. But,
videotape still works, you know, so that's what you're saying, right?
Yes,
I'm tying you down here.
It's okay.
Because you're coming back on January the 1st. You realise that?
Yes.
Right.
And if it's 8.7, I won't have to go to the guillotine, right?
No. Okay. We'll be happy with 8.7.
I'll still have all my fingers. Okay.
Our viewers will forgive you if it's 8.7, not 10%.
Yeah.
Tell me about what you're writing here, that millennials will drive everything going forward.
Oh, yes. Demographics, which is talking about generations, drive markets way more than we realize. The millennials today are the largest single population. That's people born between 1981 and 2000. But they're 40% bigger than their parents. Basically, Gen X had a lot of kids. The millennials are now starting to become net income producers. There's more millennials working now than teenagers. And over the next 10 years, for instance, millennials will account for 90% of all the increased spending on financial products. They're pretty much the only source of growth for this economy.
So sort it out for me. Sort it out for me. If millennials drive everything, and they're the biggest generation, and they're just starting to make money and earn money, tell me an industry which will benefit in particular.
Yeah, so there's a few. So we've written for our clients some things. I think the biggest one's going to be the banking industry is going to see a big surge in demand because the number of people who really borrow money, like we borrow money in our lives when we're between age 28 and 48. Okay. That number of people, because of millennials, is going to surge similar to the surge we saw from 1980 to 1992. Which was when we had sort of a big consumer boom back then. I think that's going to drive a big banking and consumer boom cycle.
By the way, you did also say that Bitcoin is going to go to 25,000 bucks.
Yes.
You want to take that back? I
do not. I still think Bitcoin's bottomed at 6,000, and we've said that it's been the bottom. It's because that's about break-even mining. I think it will be very tough for it to make 25,000 by the end of this year, but if it's by March, again, I hope viewers understand if it took an extra couple months to go to 25,000, it's not like we're really changing our...
You're going to come back on March the 1st, and we're going to talk Bitcoin.
I'm going to eventually have to be brought in with like a wheelbarrow and like all the bruises. And,
we'll see.
Yeah.
Tom, thanks for joining us, Tom. Good stuff.
Thank
Tom
you.
Lee. Thank you, sir.